Hello everyone, and thank you for attending today. My name is Steven Primo. I am the president and founder of Specialist Trading. Once again, thank you very much for taking time out of your Tuesday to come to this presentation, and thank you to all the people at FXStreet for giving me the opportunity to once again present to all of its members. As I stated, I am the president and founder of Specialist Trading, and for those of you who are unfamiliar with our website, we are first and foremost an educational company. Our goal is really to teach you how to trade with a specialist edge. We give you all of the tips, techniques, and methods and strategies that I've accumulated in my 36 years of trading in order to elevate your trading to the next level. I know a lot of you may be struggling, may not be able to get one foot through the door with your trading, with your FX trading, and so what we do is we provide you, as you see here, with the insights, the wisdom, and the trading strategies from the floor in order to educate you. I've been trading for 36 years, virtually any market you can think of, and so I've accumulated a lot of information, a lot of things that have sustained my trading, and this is what I like to pass down to my members and all of my attendees as well that come to these presentations. Now, what I'm going to be speaking about today is the best chart pattern for trading the Forex markets. Now, I know a lot of you like to look at different patterns and formations and different ways in which to trade. In my 36 years, this is what I found to be the most reliable and something that will really sustain you, and I'm going to share that with you today. Now, I'd also like to mention that FXStreet has provided us with a microsite for my website, so if you have any questions or you want to get more information about specialist trading, you can click on this link, and I see it's very lengthy. I know we don't give you enough time to actually copy everything down, so we've abbreviated it, to this smaller one here, as you see in yellow. So if you want to copy this down, this is the microsite that FXStreet has put together for us, so that once again, we don't have to take time out of the presentation to go over what we do, and you can actually get a lot of information just by going to this microsite and clicking on this link. And it'll take you here, as you see here, to Pro Trader Strategies information. Pro Trader Strategies is our sister site, and they market and promote and sell all of our individual strategies. So if you come here, you'll see that and more information. You can see about the presentation, about myself and some of our products. And also, we're currently offering discounts and special discounts to all the FXStreet.com users. So it's a lot of information there. I really highly recommend that you go to that microsite. Now, we're required to show you this before we begin. I ask that you please take a moment to view our disclaimer. I'm going to show you a lot of performance results, a lot of examples, chart examples, using this #1 chart pattern, this best chart pattern for trading the Forex markets. But please remember that we can in no way guarantee that any of these results will be repeated in the future. So please take a moment to view our disclaimer before we begin. And I'd also like to mention before we begin, I know a lot of you may have questions, but if you've attended my presentations in the past, I like to do things a little bit different. I like to wait till the very end of the webinar to answer any questions. So if you happen to come up with something, if something doesn't make sense, please write it down, and I promise I'll answer it at the very end of this presentation, not very long from now, okay? Also, I'll give you a phone number and email address. If you come up with a question once I've concluded, you can always reach me and ask me a question that way, okay? So there's lots of ways to ask questions. Just please wait till the very end of today's presentation. All right, now I'd like to start out by sharing some info with people. Now, I think a lot of people think, well, you've been trading for 36 years. That means you must have had it down from the very beginning. You've been successful all throughout your trading career. And that's not true. I always state that I had a very difficult time in the beginning of my trading career trying to make ends meet. In fact, I really couldn't make any money for a year or so. I pretty much was just treading water. Every time I would have some great months, I'd lose it all in 1 or 2 trades. So my mentors taught me specific things that would get me on that road to success. These were specialists on the floor of these stock exchanges. These were elite traders as well. So this is what they taught me, and this is what I want to share with you, especially today, is that trading should be non-subjective. So what do we mean by that? What is that non-subjective? Well, it should mean that when two people look at the same either chart pattern or indicator, or even are viewing the same news announcement, when two specific different traders are looking at this, they should come up with the same conclusion. In other words, you shouldn't look at a chart pattern and someone say, well, that's bullish, but the other trader say, no, that's bearish. That's subjectivity. It should be more cut and dry. This is what successful trading should be. So you don't want this subjectivity where the answer is up to interpretation. Also, trading should be consistent. So what do we mean by consistent? Does this mean that you're going to be profitable all the time? No, it doesn't necessarily mean that. But what it means is that we're not going for home runs. We're not looking to get these humongous gains each and every time. We're just looking for this nice two-step forward, one-step back approach. And it should be the same thing when you're looking at chart patterns. They should give you the same type of consistency in the outcome. All right, so you don't want this chart pattern and this indicator or this news announcement to work, okay, a couple of times, but then it stops working the way you interpret it or the way you use it. You want it to be consistent in the way it presents itself. And then lastly, and probably most importantly, my mentors taught me that trading should be as simple as possible. I think too many traders are losing today. They're losing money because they make their trading much more complicated than it has to be. I mean, I know firsthand, I'm speaking firsthand from this, from experience, because when I traded, my trading was extremely, extremely complicated. I had tons of indicators. I was looking at far too much news and information, too many chat rooms and trading rooms, and it was just too difficult to come up with some type of plan because I was trying to throw in everything but the kitchen sink. And what my mentors taught me is they said, Steve, it's the easiest thing in the world to overcomplicate your trading. Anyone can do that. It doesn't take much sophistication in order to complicate your trading. You can always add more things onto your trading plan. But it's the most difficult thing in the world to simplify it. And so this is really where the character comes in. If you're learning to strip away all these things we've been taught that will make us successful, have the courage to strip them away and keep your trading as simple as possible. Most of our strategies that we have and that we promote at Specialist Trading have no more than 5 rules. And they're very simple, maybe with one indicator at most, maybe one chart pattern, and that's it. So if you follow these 3 things, have your trading plan using non-subjective material, non-subjective indicators or chart patterns, have them to be consistent, and keep your plan as simple as possible, I really feel you'll get on that road to consistency. This is what changed my way of trading, got me on that road to successful trading, and I hope it can do the same for you. As I stated, my goal is not to trade for you, even though we provide our members with signals in all the different Forex markets. It's not really to just trade for you and tell you what to trade. We really want to teach you how to trade with the Specialist Edge, which is rooted in simplicity, and that will get you on that road to consistency. As I stated in the beginning, we are an educational company. We're not just trying to tell you what to trade and how to trade it. We want you to fine-tune all the information I've accumulated in 36 years to fit and to meet your needs. All right, so here's what you're going to learn today. That was a little bit about the philosophy behind Specialist Trading and how I got to turn my trading around. Here's what I'm going to teach you today. I'm going to really teach you the truth about formation patterns. I know a lot of traders, especially Forex traders, like to look at formation patterns. These are the things we've been taught that will help make us successful. I'm going to share with you the truth about these patterns. We're also going to talk about the truth about candlestick patterns as well. I would say that probably in any market, more than the stock market, more than the futures market, but the Forex markets tend to use candlesticks more than any other type of trader. And that's fine. I use candlesticks myself. But I'm going to share with you some truth I've learned about candlestick patterns as well. And then I'm going to show you the best chart pattern, in my opinion, for trading in any market and in any time frame. This is the one chart pattern you should always be looking for. Okay? All right, so let's begin. And once again, should you happen to have any questions, please wait till the very end of today's presentation, just in about 20 minutes or so, to ask anything. And then I promise I'll get to each and every question you have. All right, so let's start out with formation patterns. Okay, let's start off with the basis for formation patterns and what they're supposed to do and what they're supposed to look like. And I'm just going to go through the most popular and probably the ones that people use the most. First of all, we're going to look at an ascending triangle. All right. Now, the basis for this is that this is a very bullish pattern, because what we're looking at is something that has risen, declined, risen, and declined, and it forms this type of a ascending triangle or wedge. And what the conventional wisdom states is that usually when we break out of this, we're supposed to go higher. Okay. This is a ascending triangle, and the same thing works, but in reverse for a descending triangle. We have some type of a range here where we go down. The next rally is a little lower than the previous rally. We go down again, and then we rally again to a little lower top than the previous. So we have this type of a descending triangle or wedge. And conventional wisdom states that once we break this support, we're going to go much lower. So this is a bearish type of pattern. An ascending wedge now looks more like a triangle that's ascending, as you see here You have these three lines, the midline, the lower line, the top line, and what this states is that usually when we come to this head or to this point here of the wedge, usually we'll break down, and this is a bearish pattern. We should come all the way down to these previous lows. Obviously, the opposite for the descending wedge. Now we have the top, the middle, and the bottom wedge lines. We're forming this lower kind of downtrend, but once we come to the apex of this wedge or triangle, usually what happens is we'll break out, and this is a very bullish pattern. Okay, so these are pretty much standard wedge patterns and triangle patterns, and here we come to the mother of all patterns, because it's the most popular, the head and shoulders pattern. Okay, this basically states that you have some type of a rally which sells off to this so-called neckline, and then a higher rally which sells off right back to the neckline support, and then a smaller rally. So you have this type of shoulder, head, and shoulder, and usually when you see these patterns, they're very negative, because once this support or neckline is broken, you have a strong move to the downside. And people like to look for this. Probably one of the most popular formation patterns you'll see is a head and shoulders. Now remember we talked about in the beginning where my mentors taught me that chart patterns or anything you use should be non-subjective. In other words, two people should be able to see the same thing, and there should be consistency in it. It should be simple to look at. Well, someone looking at this older chart of the dollar-yen, we're going to look at some older charts just so that you can really see how these patterns work and how they don't work, and then we're going to show you some up-to-date patterns. But looking at this older pattern of the dollar-yen, we see here that we have a 4-hour chart. And someone looking at this could say, well, you know what, I've studied these chart patterns, and guess what? I think I see a head and shoulders. You know, we have the left shoulder, the head, and the right shoulder, and we've just broken down. So according to what I've been taught and to what I see here, we should be selling because we're going to be going lower. Okay, so we've broken this neckline. All right, so you sell, and look what happens. It goes straight up. So you stop yourself out, you take a loss, you go, well, that didn't work out too well. And so you walk away from your trading desk, and then you come back a little later and say, wait a minute, you know what? I just jumped the gun a little too early, because now I really see it. This is the valid head and shoulders. We have a shoulder, we have a head, and then we have the shoulder again. So now I was just a little bit too early. This is a much better pattern. Before it was a little bit subjective, but now I really see it. So now I'm going to sell again right here once we break this. And so you sell on the breakout, and look what happens. It goes right back up. Okay? So do you see how there's no consistency with this? Many times it'll work until it stops working. And I know this firsthand because I used to trade this pattern all the time, and sometimes I had great success. Other times it wouldn't work at all, and I would be left with a large loss. How about support and resistance? I think Forex traders love to use support and resistance. This is probably one of the most widely misunderstood and most subjective ways of trading. I know a lot of traders make really good money trading support and resistance. The only trouble is, as I stated in the beginning, one trader's support can be another trader's resistance. It's too subjective. Someone can see the support and they can see it like the back of their hand. Another trader can say, I don't see it. See, we need things that are more cut and dry. Now, this is a real cut and dry example of the way support and resistance should look. Okay, now, it's easy to spot when you have a chart pattern like this. And so, obviously, support and resistance is very simple to use. Now, if we look at a real-world example here in the British pound, an older chart, we see here that that fits this scenario perfectly. Okay, we have the support in an uptrend. And so conventional wisdom tells us that you should be purchasing at the support levels. That's the way support and resistance work. You want to sell at resistance and purchase at support, and then look for breakouts upon these specific areas. Well, once we come down to this area here of support, this is where we want to purchase again. Well, we come down to this area and look at it doesn't hold. Well, if it doesn't hold, then the second level of support should hold. So we'll buy some more down here. And then, as you can see, it doesn't. So once again, support and resistance will work until it stops working. There are a lot of traders that make very good money, make very good decisions based off support and resistance, but it's very difficult to teach. It's too subjective. And remember, my mentors taught me that you want things that are more cut and dry. You don't want things that work some of the time and then don't work. Okay? As I stated, these traders that do very well with support and resistance have this kind of internal understanding of how it works, but it's hard to teach that. It kind of just is a talent that comes naturally for them. I tried to use support and resistance just like the head and shoulders. It would work until it stopped working, and then I'd give everything back. So support and resistance is a little too subjective for us. It's not as consistent as we want to see. Well, how about candlesticks patterns? Once again, the Forex traders probably use candlesticks more than any other market traders there are. Okay, so let's look at the most widely used candlestick patterns, anything from the basic, from the engulfing, the dark cloud cover, the hanging man. These are the main, I would say, charting, engulfing, or I should say, candlestick patterns that people try to use in the Forex markets. Let's look at the most popular, which are the engulfing patterns. Okay, these are the most popular candlestick patterns used because they're so simple to spot. And here's a perfect example in an older chart of an engulfing pattern right here. We have a downward day followed by an upward engulfing pattern. So conventional wisdom tells us that we should go long. This is a bullish pattern. All right. In fact, I use candlesticks and I use this pattern a lot as well. But guess what? Unless you know how to use them correctly, they don't always work. Okay, so we teach in our classes and in our courses how to use the candlesticks correctly. But most people use them incorrectly, and this is what happens. You get that non-consistency in your trading, and then once again you're right back at zero where you're not making any money and you're wondering, how come I've been taught these things but they don't seem to work? Remember, as I stated before, the trouble is that most of these things we've been taught are subjective. In other words, they leave room for interpretation. Someone could say this is support, another one can say this is resistance, another person can say I don't see it at all. Now that's not the way trading should be. It should be more cut and dry. Also, these things are not as consistent. You'll see a candlestick pattern and it'll work great, and the next 2 or 3 times it doesn't work at all. And then lastly, it's not simple. You have to sit there and study and learn how to spot these things. It should be really simple where that in the matter of a couple of times going over the information, you have it down. You know exactly what to look for, what to see. Well, the good news is that all these things are included in my #1 chart pattern, in the chart pattern that I use probably more than any other chart pattern around. Okay? So we're going to share this with you today, exactly what it is. This is my favorite chart pattern. Remember I said to keep things as simple as possible. Well, it doesn't get more simpler than this. I'm not being facetious and I'm not trying to be sarcastic here, but this really is the most important chart pattern I use. To be more specific, this is what I'm looking for. I'm looking for a bar chart, regardless if it's a 5-minute chart or a monthly chart. It does not matter. I'm looking for a chart, regardless if we're looking at a candlestick or an open, high, low, close chart the way we see here. I want to see it close in the top 25% of its range. That's it. If I see that a chart closes in the top 25% of its range, this means I'm looking to buy. Okay? It doesn't get more simple, more non-subjective than that. It's cut and dry. There's no way you can interpret that as something else. How about this? If I see a bar chart close in the bottom 25% of its range, it doesn't matter if this bar you were looking at right now was a monthly bar of the Australian dollar or if it was a 5-minute bar of the euro dollar. It does not matter. If it closes in the bottom 25% of its range, you should be looking to sell. Now someone, I'm sure, could look at this and say, this is way too simple. I mean, what's so big about this? Why is this chart pattern so important? I see these things all the time. Well, this is what my mentors taught me, and this is what I want to pass on to you. You may want to write this down. When a price bar, regardless of the time frame, regardless of what currency pair you're looking at, does not matter if it's a monthly bar, a weekly bar, a daily bar, or a 5-minute bar. But when a price bar closes either at or near the top or bottom of its range, the market, remember whatever currency pair you're looking at, the market is giving you a clue as to which direction it wants to go. So what better clue could you get than from something other than the market itself? The market is giving you a clue as to which direction it's most likely going to go. Now remember, this is not guaranteed. Nothing is guaranteed. But this is a great, great chart pattern that gives you a clue from the market itself. See, it's not coming from an outside source such as some trading room that you've joined or some economic news that you're trying to decipher or for some chart pattern that you're trying to figure out what it's telling you. This is the market itself saying, listen, there's a high probability that I'm most likely going to be headed in this direction for the short term. All right, so how do we implement this? So how, it's not just enough to see this. This is not a strategy. It's just really a clue. But how can we incorporate this within our trading? How do we implement this chart pattern within our trading? All right, so here's the rule when you're using this. Now remember, you can apply this to any strategy, any trading technique. It doesn't have to be mine. It can be something else. But if your strategy, whatever you're using, gives you a buy signal, tells you, okay, you should be going long, even if it's based off of news. use this chart pattern either as your entry bar. In other words, this is your setup to go long, or you can simply use it as a directional tool. If you see a lot of these bars are closed in the bottom or top 25%, it's just a directional tool telling you most likely where the market is headed for the short term. Now, if your strategy gives you a sell signal, all right, say you're watching fundamental news and the numbers came out that you interpret as a sell signal. Well, use this chart pattern as your entry bar. This is the bar telling you now is the time to enter. Or you can simply use it as a directional tool. In other words, if you see a lot of these in confluence, then it's telling you the short-term direction of the market. All right, let's make this a little clearer. Let's look at some daily bars, okay? And let's say we're using a strategy that is a pullback strategy. And what does this mean for those of you who aren't familiar with this? Well, let's say we have found the trend, okay? If the trend is up, a pullback strategy simply states that we're looking for some type of a sell-off in that uptrend. And that's where we're going to be buying on that little sell-off or dip in price. If we have a downtrend, if the market is going lower, we're looking for a little blip in price or a little rally. That's where we're looking for our pullback to the upside. So we're looking to go short somewhere within that little rally, okay? So let's look at some current charts here. In fact, we're looking at the dollar-yen starting in February all the way up until the end of May, just this last week. All right, so we see that obviously we're in an uptrend. All right, so we're in an uptrend here. The dollar-yen has been going higher since February up until the last week in May. So what we want to do is purchase on these little sell-offs. You see this little sell-off right here. So how do we know when to enter? Well, we're looking for a bar to give us a clue. And right here, it gave us a clue to purchase because why? It closed in the top 25%. And guess what? From that point, we went up 300 pips. See how the market, not an outside source, gave you a clue as to where to enter. All right, so we look for another sell-off. Here's another one right here. And now we look for a bar that closes in at bottom 25%. That coincides with some level to purchase. And here we have another bar closing in the bottom 25%, or, I'm sorry, the top 25%, which is telling us we should be looking to buy. And now we go up 400 pips. All right. Another sell-off, short-term sell-off right here. Here's the first bar that closed in the top 25%. And there's a little rally of 200 pips. And then another sell-off right here. We look for a bar that closes in the top 25 right here circled in green, and we rise another 400 pips. Now this is just a technique. This is not something that we have any rules stated yet, or where you actually place your entry order, where you place your stop, where you exit, but just showing you this method of how simple, how non-subjective, and how clear-cut, how consistent it can be if you just simply learn how to listen to the market and strip away all this useless noise that we've been taught that's going to make us successful. Remember, we don't want it to have interpretation where we say to ourselves, well, is this a sell-off or is this a support? Is this a rally? Is it, we don't want to be thinking that way. That's why we lose. With this, we're cut and dry. We see we close in the top 25%. That's our signal that market wants to go higher. How about the Australian dollar? Up until the end of May, this last week, we see that we're in a downtrend, okay? And we look for these little blips in price, a little rally, kind of a small little rally right here. As we can see, when we rallied, guess what? We closed in the bottom 25% here, market sells off in the Australian dollar. We rally again, we have a bar that closes in the bottom 25%. Look at the sell-off that ensues. Then we have a small little 2 or 3 bar rally here, and then followed by a lower closing bar, and then we sell off again. See how the market is giving you these clues. Very simple. Let's look at weekly bars. Now, if we want to see the same thing, the same technique, we can find this on weekly bars, but we have to kind of go back a little further because of the time frame we're using now. You're not going to get as many current examples of this. But if we look at an older chart in the Swiss franc, we see that we are obviously at this point coming into 2012. We were in an uptrend into mid-2012. So we see here that we're in an uptrend. So we're looking for a little sell-off in these uptrends. And every time we had a sell-off, once we found that bar that closed in the top 25%, we had a nice little bounce. If we look at monthly bars, we're going to see the same thing in monthly bars. Obviously, we have to go back a little further to find this because of the time frame. There's not as many examples. But we can go back on monthly bar chart of the euro-yen, and we can see at this time we were in a very severe sell-off, downtrend. But every time we had a little bounce, once that bounce had concluded, we wanted to find a bar that closed in the bottom 25%. And as you can see, once that bar closed, what did the market do? It gave you a clue that, Okay, we're much likely going lower. Okay? Here's a clue that we're selling off again. Here's another clue. We sold off a little bit, but this clue was better. We sold off more. And you see how using this simple technique will really get you in sync with what the market wants to do, because you're learning to listen to the market and not following someone in a chat room or a trading room or someone issuing some advice on what the news should mean. Now let's look at some intraday bars. You're going to see a lot of these examples if you go to smaller time frames. Okay, we couldn't find that many examples when we were on a monthly chart, so we have to go back. But we can see these as few as just a week or so ago. We look at a 4-hour chart of the Canadian dollar. This was just a couple of weeks ago, and obviously we're in an uptrend. We can see here with this green bar that we're going a nice uptrend. We look for these small sell-offs. Every time we had a sell-off, we look for a bar to tell us when it's okay to get back in. Guess what? Look at the very bottom of all these sell-offs. There was a bar that closed in the top 25%. Do you see how the market was telling you, look to buy? And if we look at an hourly chart in the Australian dollar just a few weeks ago, a week or so ago, obviously the Australian dollar was in a downtrend on an hourly basis, but we had these nice little pullbacks, these little bounces. So every time there was a bounce, all we had to do was look for a bar giving us a clue that most likely we're going to head lower. So every time we see the bottom close in the bottom 25%, that could have been our clue to go short the Australian dollar on an hourly basis. And you see how these bars coincide with right around the tops of these pullbacks. All right, so let's recap. We talked about the truth about formation patterns. We know that traders love to look at formation patterns. I know firsthand because I did myself. I used to use all the formation patterns. I used to look at head and shoulders. I used to look at support and resistance. And once again, they're too subjective. All right? One person can see a head and shoulders. Another person can see an ascending wedge. Trading shouldn't be like that. If some person sees support and some person sees resistance, you should see it too. And you should be able to see it in a second. And from then on, you should be able to interpret it. But most of the times, people are interpreting different things. So we don't want trading to be that subjective. We want it to be more cut and dry. Same thing applies for the candlestick patterns. Now, I use candlesticks. In fact, a couple of our strategies incorporate candlesticks. But we refine them so that we really understand how to use them. Most people, in our opinion, don't really know how to properly use candlestick patterns, and therefore they lose. So we take the subjectivity out of it, and we tell you exactly what to look for. Now, in my opinion, the best chart pattern is simply finding a bar that closes either in its top 25% or its bottom 25%. Why? Because, once again, it is probably giving you the most valuable information you'll receive from anywhere other than the market itself. It's the market telling you that I'm giving you a clue. I'm most likely going to be headed in the same direction as where we closed. If we close in the top 25%, the odds are giving us a clue that we're going to be going higher. If we close in the bottom 25%, the market is giving us a clue that most likely the odds say we're going lower. So this, I can't see how it can get much more simpler and non-subjective than that. Points to remember, though. I gave you a lot of examples. We went over a lot of information today, a lot of free, valuable information that you can start using as early as today as you like. But please remember, what I showed you today is not, I repeat, it's not a strategy. This is probably the biggest mistake most of my attendees to webinars make, as well as my students that I'm mentoring and sharing this information with, that have signed on to become members of Specialist Trading. They think that this is a strategy, so they get so excited after the first lesson they start trading this. And I have to tell you that it's not a strategy, because for a strategy to be valid, you need to have an entry point. You need some type of entry information to tell you exactly where to enter, where you should also place your stop. And you should have ways in which to protect yourself. Also, you have to know where to exit. You need exit points. I didn't give you any of that information today. That's reserved for our members of Specialist Trading. So what I gave you today was just a great, great clue that the market gives you in a chart pattern. But it's not a full-fledged strategy. It's just a piece of the puzzle that you need in order to have a valid strategy. Remember, this pattern is best used either as your entry bar for a strategy that you have in place, or just as a directional tool. If you see a lot of these bars closing either in the top 25 or bottom 25%, it's a directional tool telling you that most likely we're going to continue heading in that direction. So you can use it as that very simply, very easily. As well, you can apply this to any time frame. I showed you this on a 5-minute bar as well as a monthly bar, and in any direction. We saw this going with the market going up. We also saw this perfectly exampled with the market going down. Just remember that the higher or lower the close, the better the pattern. So if you see something close in the top 25%, that's great. But if you see it close at the very high or at the very low, that's even better. Now, I'd just like to take a few moments here to invite you all to become members of Specialist Trading. This is probably one of our premier strategies for the Forex markets and probably our most popular strategy course to date. This is Forex Swing Trader Strategy number 5 course. We've accumulated in just a very short time, close to actually now up to 130% gains in just a little over 2 years. As you can see here, you get detailed instruction. All entries, exits, and stop information is given to you. Also get 1 year of free trade signal alerts, so you will have emailed to you the night before where to enter and place your entries, stops, and exits. Because you are a member, you get 1 year of those trade signal alerts. 1 year of weekly trading lesson. This is a video that I make for you so that you can elevate your trading by studying a different tip or technique each and every week. PDFs of the rules so you can print them out and study at your own leisure, and also personal email access to myself. You can email me whenever you'd like, and you can ask me any question whenever you want. Now, this course usually runs for $5.95. For the FXStreet attendees today, we've reduced it for a limited time down to $3.45. And let me show you some examples. These were actual signals that were generated using strategy number 5, our course, and these were emailed, all of these signals, the night before, where to enter, to all of our members. This was at the very beginning of the month last month, just a month ago, in the Australian dollar. We issued a sell signal on the 1st of May, telling all of our members to go short the Australian dollar. Then the next day after that, we got a buy signal in the dollar yen, issued to all of our members, telling them where to enter. And just a couple of weeks ago, we had another signal in the euro dollar telling all of our members to go short. So as you can see, it's based off of very simple rules, this Forex strategy number 5. And you can exit at different places, you can enter at different places, but we refine it so that we can meet your needs if you're a conservative trader or an aggressive trader. The examples I'm showing you right now are just using the most generic way of entering the trade. So once again, if you want more information about any of the products or about myself or what we do at Specialist Trading, you can go to the microsite that FXStreet has provided. Circled in green on the bottom there is the abbreviated link that you can copy down right now. And remember, it'll take you to the microsite that FXStreet has for us. There's a lot more information about myself. There's a lot more information about our courses. And also, you can see some of the offers we have for the FXStreet.com users, where you can get up to $500 off on some of our strategies. Okay? Okay, I want to thank you all for waiting to the very end. This is the question and answer portion. Remember, if you have any questions, you can ask them right now. If you have questions about where to purchase any of our strategies, you can go to protraderstrategies.com. This is our sister site. If you'd like to email us, once we conclude today, you can always email us with any questions or purchase the course. That's our VP of Operations, Brett Marsh. You can email him at brettam@specialisttrading.com or call us directly at area code 310-844-7220. Hi, Boyke. I think you asked, does the 25% have to do with the candlesticks? I think I saw your question. Actually, this is a technique that we use pretty much, I would say, in 3/4 to 90% of all of our strategies. The setup bar, I would say, on majority, always has a bar closing in the top 25% or the bottom 25%. So people will say, well, what exactly is the setup bar? Well, all of our strategies have anywhere from 4 to 5 rules. And when all of these requirements have been met by all of these rules, which are extremely simple, they're nothing complicated, you don't have to be a physicist to figure this out. All you have to do is look for the last bar to close in the top 25 or bottom 25%, and then you will usually be entering on the next bar. Okay, that's usually the way it works. Someone asked, does it work on ranges? Yes, well, it will work on ranges, but usually, many times you won't find these in a range. Remember, this is the market giving you a clue, whatever currency pair you're looking at, giving you a clue that it's most likely going to be headed in a certain direction. And many times when you're in a ranging market, it won't close there. But we give you specific entry details, and I may be talking about this in webinars to come. It's a confirmation method. which will keep you many times out of rangy markets. This is another method for entry, and we just wait for confirmation by seeing how the market trades on the next bar, either if it trades above or below the previous bar's high or low. So many times this will keep you out of trouble. So even though you may see a bar close in the top 25 or bottom 25% of its range, if you use another technique, it will keep you out of these rangy kind of whipsaws market. And this is, once again, we're an educational company. All the things I've accumulated in 36 years, I share with my students so that we can really shorten your learning curve. I don't want you to be around for 36 years until you finally become successful. I want you to soak up all the information I have in my courses and strategies so that in anywhere from a month to 6 months, you'll have it all down what took me 36 years to accumulate. Okay? Any other questions? Remember, this is the information if you want to reach us. Just once again, let me backtrack. If you have more questions about what's offered, let me just share with you the current, backtracking here. This is the current information we have with Forex Swing Trader course strategy number 5. Once again, this is our most popular course, and this is probably one of the most successful we have had to date. It's extremely simple, and a lot of traders use this actual course for intraday trading as well. We have, I believe there's a trader we have in Texas who swears by using this on roughly, I think, 5 or 10 minute charts intraday with the Forex markets, and he says he does fantastically well. So even though we provide you with information, it's up to you in which time frame you want to be using. People are also asking questions. What about the 50-period simple moving average? Yes, those are other topics, and those are other things that we didn't bring up today because we want to give you piecemeal information bit by bit. But those are all things incorporated in our courses and all things incorporated in the presentations that we give. Let me just swing back here very quickly to the information page, and the things you've asked about the 50-period simple moving average. They're very simple and they're very basic, and probably the best thing is just if price is above the 50-period simple moving average, all you have to do is simply look to go long. If price is below, then you're simply looking to go short. Once again, we keep things as simple as possible. Someone asked, do you have ways to measure that you're in the top, bottom 25%? Well, once again, we issue all the signals that are generated in the Forex markets, the top 7 markets that we follow. And if we see that all the rules are met, we will send you a signal telling you where to buy, where to sell, and it usually does incorporate that a bar closed in the top 25 or bottom 25%. So you know right off the bat if you get a signal that it met all the requirements for closing in that top or bottom of its range. But it's so simple to see. You'll be able. I think that there are some Fibonacci tools where they can break a bar up into different sectors, a half or up into 25, and you can just use this and you can see very simply on your charting software if something closes in the bottom or top 25%. It's very easy to spot. Many times you'll see bars close at the very top, so you know right off the bat that it closed there. But remember, this is a tool, but it's not a strategy. So I don't want people just to simply get so excited today they start buying or selling when they see these things. This is a tool that must be used with the other pieces of the puzzle. Okay, and this is what we provide at Specialist Trading. We give you all the other pieces of the puzzle that I've put together for 36 years of trading that really have these nice, consistent strategies. Okay, so use this as a directional tool. Remember, it's the market giving you a clue as to which direction it wants to go. Go ahead and look at some charts right now and see charts that have closed in the bottom or top 25%. Usually they're giving you a clue that they're going to continue in that direction. Okay? Any more questions before we conclude here? And remember, I really want you to take advantage of this special. To accumulate close to 130% in just a little over 2 years is fantastic for such a simple trading methodology. I know many of you have not been able to get your foot through the door of trading Forex. This is something that's extremely reduced down to $345 for all the attendees. I urge you to take advantage of that limited time offer if you really want to get your Forex trading going to the next level. Okay? All right, well, if there are no further questions, I want to thank you once again all for attending. I want to thank all the good people at FX Street once again for giving me the opportunity to speak. Thank you all for taking time out of your day, and I wish you the best of luck trading. And I also look forward to all of you becoming members of Specialist Trading. Thanks a lot. We'll see you next time. Bye-bye.